Good morning, everybody. We've got a higher trade in the grain markets here early on Thursday morning. It's 6:30 a.m. Central Time. December corn futures up 2.25 at 577.5. January soybeans up 5.75 at 1282.75. December Chicago wheat up 13.75 at 836. December Kansas City wheat up 11.75 at 845.75. December spring wheat is up 13 cents at 1040. If you guys are listening on the podcast, appreciate it. Leave me a rating or review on that Apple app in particular. Could use some more reviews there. If you're watching on YouTube, make sure you subscribe to the channel. Make sure you like these videos. Help me to grow this thing. My goal is to get to 5,000 subscribers. We're getting close to 3,200. I think we can do it here over the course of the next several months. If you need some additional assistance from me, guys, go to my website. It is www.standardgrain.com. Click on Grain Marketing Plan in the upper right-hand corner. Check out the subscription service, $49.99 a month. This is a standalone product. It includes my morning email, text message service, subscriber-only videos, all of my grain marketing recommendations. This is a monthly deal, no other fee, no other obligation. Cancel it at any time. Won't try to sell you anything else. I promise. Certainly check that deal out. Lots of chatter going around regarding China and soybeans. We saw this stuff start late last week, and it's been on. I mean, there's always chatter regarding China and soybean purchases, but last Friday we saw this chatter regarding 10 or 15 cargoes of U.S. beans, and then on Monday there was this virtual meeting between President Biden and China's President Xi. And for some reason, the meeting was Monday. For some reason, these last couple of days, it seems like there's some talk that maybe there's going to be some correlation between that meeting and more soybean purchases. So the specifics here, the stuff that I've seen, like another 2 or 3 million metric tons between now and maybe mid-January, and different things that I've read suggested different amounts and different time frames. But in any case, I think that the trade is very much expecting more Chinese soybean purchases. Now, we did see a few purchases confirmed this week. There was one actually to China yesterday that was a smaller purchase, 132,000, and then we saw some sales to unknown destinations earlier in the week. So we have seen some buying, but I think that the trade is very much expecting more buying, and that's the reason why you've seen this nearby January soybean contract rally more than $1 from last week's lows. It's been really, really impressive. Even if China does come in and say they buy 2 or 3 million metric tons of beans in the next 6 weeks, we are 16.5 million metric tons below last year's pace in terms of export commitments. So you're going to need to see that, and then more than that if we're to avoid more bushels on the balance sheets because of a reduced export number. I think that that's coming. I don't know that we ever play catch up here totally, but we may see some more purchases. U.S. ethanol production strong again last week. Weekly output 1.06 million barrels per day. That was up 2% on the week, up 10% versus the same week last year, and up 2.6% versus the same week in 2019. Ethanol production margins are absolutely fantastic. They're some of the best that we've seen in years, best since 2014, I think. The chart I have on my screen here is a Reuters calculation, and I think they're just using spot prices for corn and natural gas and ethanol. But most plants, I think, around the country are able to clear $1 per gallon in profits, if not more than that. And that will continue to drive basis levels, will continue to drive the futures market to some extent. We've got abnormally strong basis seasonally. I mean, how often do you see corn prices at levels that are this profitable? Plus, you've got fantastic basis with a really good national crop, barring a few areas. I mean, it's really pretty impressive, and ethanol has a lot to do with that. The fact that the ethanol producer can just make a ton of money here. So that continues. And one of the positives is that ethanol stocks were lower last week. So despite the fact that we're grinding all this corn for ethanol, we're not building stocks. Ethanol stocks seasonally are the lowest in 5 years. So that implies that we're using the ethanol that we're producing. A lot of people have questions about that ethanol stocks issue, and I'm not an expert on that situation by any means. Heavy rains in Argentina have boosted crop potential there. Reuters had a quote from one analyst. He said this: "The rains in mid-October and early November put a stop to the drought that was worrying the market. These showers came at an ideal time for wheat. right as crops were entering key stages of developments. This is a private analyst named Pablo Adriani. I like him. He went on to project what he called a super record wheat crop of 23 million metric tons. That would eclipse the previous record for Argentina by 20% or more than that. The rains have also been a positive factor for corn and soybean potential, crop potential. So Argentina is in good shape. Brazil is largely in good shape. South America, despite all this talk of drier weather, they've caught a ton of rain. All the potential for huge crops down there. Ukraine is not considering further wheat export restrictions. An ag ministry official had some comments yesterday, said that there could be some sort of action taken later in the season if the pace of exports remain too fast. He said this: if the export tempo remains the same, if 90% of the quota is exported by March, for example, then we will need to go into daily discussions with traders. We want to be open to the highest possible level of exports, but of course not at the cost of domestic consumption. Our population is not wealthy enough to support high prices. So you've still got, they say they're not going to do anything right now, and they're probably not, but you've got all this talk from these big exporters, Russia and Ukraine in particular, regarding, either restrictions or the potential for restrictions depending on the situation. These shortages are an issue here that open up the door to these sort of restrictions. The global wheat situation's the tightest in 5 or 6 years. The U.S. wheat situation, I think, is the tightest in about 8 years based on the stocks-to-use ratios at least. Crude oil has been under some pressure, traded its lowest level in 5 weeks overnight. Your nearby January WTI traded below $77 per barrel for the first time since, I think, October 7th. The Biden administration is requesting a global coordinated effort to open up some oil reserves, and it sounds like China is going to do just that. Now, OPEC continues in its refusal to increase production despite requests. A lot of this is politically motivated. There's a lot of political pressure here for the White House and for the Biden administration to knock down gas prices. The oil chart is pretty crazy. This is one of those crazy charts that's going to go down in history as part of the COVID era when prices traded negative in April of 2020. And then we saw this massive rebound because we had a huge economic recovery. Economic activity resumed at a quicker pace than oil production, essentially. You went from negative prices in April of 2020 to, north of $85 per barrel just, a couple weeks ago. So it's been pretty crazy. Gas prices, very high. This is a week old. I think the number's 342 as of this morning, national average gas price. But that's the highest since, 2014. And there's a lot of political pressure here. People want lower gas prices. They don't like this inflation. It's not like we haven't been in this territory before. We were here for years from, 2010 through 2013 or 14 in terms of gas prices. So it's not anything that we haven't seen, but people don't like it. We do have an export sales report this morning at 7:30. Corn sales expected 800 to 1.4 million. Soybean sales expected 1 million to 1.6. Wheat sales expected 250 to 500. Cattle market was mixed yesterday. We had fat cattle mostly higher, feeder cattle more of a mixed affair. There was some cash cattle 131 to 132. We'll see what develops today. In the outside markets, the U.S. dollar is marginally lower, but has been very strong. The S&P's up 12. The Dow's up 30 points. Bonds up a little bit. Precious metals off just a little bit. The January WTI crude contract down 53 cents at 77.02. Everybody have a great day today. I'll talk to you guys same time tomorrow.